the Forex market, because that is our goal for today, please be aware of these disclaimers. First of all, the fact that the webinar is intended for a global audience, but may not be suitable for everyone. To find out if it is suitable and other details, please visit admiralmarketsglobal.com, select your country of residence, and then contact the appropriate entity. That same path you can use also to request a copy of the risk disclaimer, but basically it states that trading for exchange and other financial products is considered high risk and may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. All right, so today our focus is going to be on the Camarilla Indicator. It's a pivot point indicator. It's a very useful indicator for support and resistance, for determining break and bounce spots, and for understanding in what kind of zone and sentiment the trading is at for like during the day. I'm making it a bit complicated, but during the day, what kind of sentiment is basically for that pair. What I mean with sentiment is it in a bullish or bearish kind of zone and direction. So there's a lot of purposes one could use it for. I think the best is for seeing it as a trigger and using it as support or resistance, and also understanding what kind of depth we might expect during the day and what kind of targets might be fair and reasonable to expect throughout the trading day. If you don't have a copy of the Camarilla, I can actually send it to you. It's not a problem. Just send me an email and I'll send it to you. And that way you can always have the same indicator as the one I'm looking at. All right, so good morning, Justinas. Good morning, everyone. Hope that everyone had a good weekend, first of all, by the way, and had some good trading yesterday. And with that said, let's move over now, after this introduction about Camarilla. Let's take a look at the calendar. Let me move over the calendar here and take a look. Oh, there we go. Pound news, CPI, German ZEW, economic sentiment. So we got some euro and pound news coming up, and some lighter scattered news like the pound and dollar throughout the day. All right, so tomorrow, of course, by the way, we have a big news event because that is the FOMC. I personally am not expecting any substantial news to come forward. I think that it will be flat, just like what we've seen so far, nothing new, and nothing really unexpected. I would expect not to expect anything unexpected, so to make it complicated. But what I mean with that is, no, I wouldn't expect any quantitative easing. Of course, they just got rid of it in the U.S., but I wouldn't expect interest rates to go up either, and would actually not expect it for the entire year. But of course, obviously, I could be wrong, so it's still going to be interesting to see what they say in the statements, and if there are any nuance, slight differences in their tone, how they view the markets and the progress of the economy. So with that said, I sent, for those that asked me, I sent the email address, and just, you don't have to make it complicated or long. I don't want to squander your time. Just a simple, please send Camarilla is already enough for me. All right. So let's now take a look at the AUD/USD. I'm looking at blank charts for the moment. We will look at the Camarilla in a second, but there's just one thing. Camarilla, I think, is great for intraday and even for intra-week. But I wouldn't say is the best tool for looking at, let's say, daily and weekly bigger market movements. So for the moment, let me just bear with me as I just take a look at a few of these daily, weekly charts, just to get an idea together with you in the process how we can look at the bigger time frame, get a bit of an idea, and then we'll take a look at the Camarilla and dive into lower time frames. Now I'm looking now at the AUD/USD, Australian dollar versus the US dollar, and we've seen yesterday turn into a doji. I was interested in potentially shorting the Aussie if yesterday's candle, daily candle, were to have been a decent bearish candle. Yesterday's candle was not anything of the sort, didn't even come close, ended up as a doji, which means close, of course, pretty close to the open, near the open, and no decision at all. Indecision, no direction on yesterday's candle. And in general, you can see price is pretty choppy. The break did occur here, and that's the break I was looking for, but price didn't have enough muscle and strength to break this support. And that's, of course, always interesting to keep an eye on support and resistance, because despite the trend, despite momentum, sometimes price is not able to push through support and resistance. That's why it's so important to keep an eye on these three things: trend and momentum, support and resistance, because those are the levels where trend and momentum can stop. And then last but not least, patterns. Any patterns, candlestick chart patterns, time patterns, etc. Those are the three key things in my opinion. So when we look at this, we see what kind of pattern. We see a consolidation pattern. We see the end of momentum. We still see a downtrend, and we see price bouncing off support, but also bouncing off resistance. And if it does break to the upside, we have more resistance ahead at 80 and then 82.50. So in this regard, I was interested in shorting it yesterday because of the bigger downtrend that you could see now a lot easier when I zoom out, and you see how much it fell recently, in the last 6 months. So yes, there is a lot of downside trend behind it, right? And in the weekly chart, you can see it, this piece as well, plus actually the trends prior to it. So yes, there is a lot of downside momentum force here in play. Is there any hint or is there any hint, of divergence? Let's take a look. Yes, a bit. Not all too much, but this low is a bit lower than this one. And this one, of course, is again lower than the first one. So we have lower lows on price, but not so much on the oscillator, which means that we could be in a retracement mode. And although there is a downtrend, that shorts are probably a bit risky at this point. And in fact, let's take a look at the 4-hour chart, and let's take a look. It's not actually divergence, because these two bottoms, this bottom is not breaking the previous bottom, right? So it's not totally that. But it does show the struggle here of the downside. So the dollar could face a bit of a trouble this week, perhaps even next week, as this could easily retrace. But the question is how far and how high, and is it tradable to the upside? Do I want to take a trade into that direction? So let me add a moving average. For the moment on the Aussie, I don't see any clear signal that I would like to go long. But how about the shorts? Let's take a look at a 144 EMA, and you can see that that is the typical target for a divergence. So that's pretty far actually. So you can see there's a potential for retracement here easily to the upside. For the moment though, I would not trade it unless price drastically sets a tone by breaking out of this consolidation. Not even this line. Let me do it this line. Price would need a clear 4-hour candle above it. And then a bounce, preferably a pullback, looking for retracement of the 4-hour candle that just broke out, and then a potential bounce off that same broken line could make sense as a long. Till then, I think it's risky both ways. It's always risky, of course, but it's too risky. The probability is not good enough for both sides. So I just wanted to show you that the Aussie daily chart was my key kind of factor the daily candle in today's equation, whether I will take a trade or not. The euro dollar is kind of showing the same thing, in fact. It too is showing that the dollar is having a bit of a struggle right here. It too could easily actually have a breakout and retrace higher to 116, for instance. So let's take it step by step and not go too fast. First of all, the euro dollar broke out of this resistance trend line. All right, so from a daily perspective, it's not below this high steep trend line anymore. Or it was that, it probably already wasn't for a while actually. The other important thing is this consolidation, obviously. We have a clear support line here, and price is not able to break either that much above this 114.50 / 115. Let me use red actually. So price is stuck in between those two levels, support and resistance. So for me, naturally, there are a couple of trades that I'm interested in. First of all, we have a downtrend, but the momentum to the downside is over because it's flat, the momentum. So we got a downtrend, but momentum is flat, right? We have a pattern, yes, we have a consolidation pattern here. And we have key support and resistance in play, and that's something we'll discuss as we go along. So for me, this bottom of the consolidation obviously is the first logical support level to be aware of, 112.50. A break of 112.50 logically leads to a breakout trade, which is with the trend. We do have to be careful of this bigger bottom, which is a support level at 111. After that, price should be in a downtrend below 111. There shouldn't be any hesitation, and price can fall further down to its targets, which is anywhere at 110, 107.50, 105, 102.50, parity. Until that moment, price could also easily retrace higher instead of making the breakout here, and later on below the bottom. It could also break to the upside in a bigger kind of zigzag formation, with this being perhaps part one, or this perhaps being part one, this being the consolidation, and then getting a zigzag follow through. That bullish breakout is against the trend, but would make sense considering the zigzag potential. And would only be kind of a bigger correction within the bigger downtrend. So this 114.25 is important for me. 114.50. Any 4-hour candle that could post a close above it or post a close below 112.50 with a decent sized candle, not all too small, with a candle close above or below those levels, with a candle close near the high or near the low, and not too much wick, is for me to signal the trigger that the euro dollar is breaking up or down. The upside target, in my opinion, is relatively close, because if I put a fib on the first swing high, swing low, the minus 272 target is at 116.50. If I put a fib on the very first leg of the correction, then we have a target of 116.25. So basically both very close to each other. And we see here that price moved up, hit the 50, moved the target, hasn't broken up or down. If it does break up, then the minus 618 will be the next in line. That level, as I already said last week, because the analysis hasn't changed with the euro dollar compared to last week, is that level is also a heavy zone of resistance on the daily chart and gives a confluence. And the third trade I would be interested in is a short from that level downwards. So a short at 116.25.50 for downside, a big downtrend continuation, kind of a swing trade, position trade. The upside, there's not as much space. From 114.25 down up to 116.25, it's still a good 2 cents. or in other words 200 pips. But for a swing trade, it's okay. For intra-week trading, it's still great because there's a lot of movement. But of course, compared to 116 and a potential fall down to parity, which is 1600 pips, 200 pips is obviously on the lot lower side. So good potential, but it is against the trend, and the potential, the wide open space there is smaller than the space below it. Hence, the shorts from 116.50, 116 and a quarter are more lucrative than the longs against the trend upon the break of 114 quarter, but still definitely a possible trade, certainly. And those are the three trades that I see on the euro dollar. Now this red line, you might wonder what that means. It was a trade taken on the 1 minute chart actually Wednesday's webinar on strategy last week Wednesdays, and I promised to get back to that. So I still left it there. We'll take a look later on. Oh, by the way, and Björn is, no, not Björn, Justina, sorry, is looking for a short at 116.50 or even 117.80. 117.80 is all the way here, which is the next zone actually. It's also kind of a supply-demand zone, just like this one. And it could get there, but first of all, it would have to indeed eventually push up, probably respect that level, and then move up and move through it in the second attempt. And Justina says it's a 23.6 fib on the daily chart. That must be the whole leg, I guess. Yeah. Gotcha. Yeah, if you really, if that's possible. I don't have it yet as completed this entire move down. But I see your point. I would probably still use this swing high, swing low because of the Elliott wave perspective. But then it's only a bit lower, 117.20. But it could retrace at least a very large part of that downside eventually. I see your point. Good perspective indeed. Makes a lot of sense. For the moment, it's too soon to tell, but eventually that will happen, and it could be now. So that is definitely true. Great job. So pound dollar, does it have the same perspective as the euro dollar? Not really, because here we're breaking out of a bigger downtrend channel, and it's happening at a spot where price is actually approaching a big weekly support level. So it's not surprising that price is struggling here to the downside. And it's struggled so much that it has been turning up and now breaking resistance and slowly but surely turning into a uptrend channel. It's not, however, an uptrend channel that is very well established and has a very clear historical kind of track record for the moment. It's still very fragile and shaky, I would say, this uptrend. Especially considering and comparing it to the massive bearish momentum we've had so far. So slowly but surely, definitely getting rid of the bearishness when looking at this chart, obviously. Not jumping for joy for the longs, unfortunately, either. So to me, with the pound news, this is really not too interesting at this point. Dollar yen daily chart is, I think, quite simple at the moment. The most likely scenario is that this is a triangle and E could be finishing anywhere, but it's not likely that E will finish soon. It could be more of a complex E before indeed the breakout to the upside, the bounce and break to the upside. Specifically and more especially interested in longs eventually when the E completes or upon the breakout or upon the breakout. Alrighty. Dollar CAD to me looks like a bouncing spot potential, as it also could make a correction like this. If it doesn't hold, if this bottom doesn't hold, then basically price could be in a bigger correction, and we might see kind of a zigzag like this, and then still this around here is a bouncing spot. Why? Because if you put a fib on this correction, then these targets are turning around spots. All right, those are the majors. Let's now take a look at Camarilla before I dive into too many pairs. So I'll switch the template. Give me 1 second. In the meantime, maybe I can show you that this week let's see 1 second. This week, tomorrow we have Forex strategy. Yesterday we had the weekly FX recap with Nenet as always on Mondays. Tuesday, Wednesday mornings we have the trading room webinar. Wednesday evening, Nenet is talking about price action channel types. And then Thursday, Nenet and I are taking a look at how to improve your multiple time frame skills. All right, with that small commercial for our webinars in between, it's still not loaded, so let's take a look at what Nenet had to say. Nenet was talking about a Kiwi upside. The Kiwi did move up. Not sure if he got the price that he was looking for. Let's see what he was looking for. $73, $75, $73, $90. So let's take a look. Alrighty, there it is. So, goal now to take a look at the lower time frames using the Camarilla. Alrighty. Moving into the 30-minute chart. And taking a look now at moving averages as well, by the way, besides the Camarilla. The Camarillas are these levels. Anyone new here to Camarilla by any chance? These H5s, H4, H3, L3, L4, L5. And the idea is to trade either a bounce or break at these levels. Bounce trades are best either at H3 or even at H5 when reaching the target, for instance. Well, any bounce trade could occur actually at any of these levels. I should correct myself. And any break could occur as well. The sentiment for which one makes more sense is really dependent on either taking a look at the bigger trend on a higher time frame, or taking a look at moving averages, or even just waiting, even willing to take both the break and bounce, but just looking at price action and seeing which one seems more likely by looking at the candlesticks and saying, okay, this one is looking like a good break because the candlestick is pushing through it, for instance, right? So it all depends how active one wants to use them. I myself use it more as a breakout than a bounce setup, but then it might do it differently. And in that regard, it would be better to ask Nenet about that aspect of it, because he uses it in his strategy as a core principle. For me, it is more of a confluence and addition to how I look at trading, not the fundamental, let's say, priority in all cases. That is different with Nenet. So with advanced questions, it's always better to go to him, by the way. Matus is asking, could it also be used in scalping mode? And as far as I am concerned, yes. The only thing is that you want to realize that, of course, the differences between the Camarilla levels are on a scalping level maybe quite large, even in a way. So it could take time before those levels are in sight. Some scalpers could probably see trades already in between those levels without waiting for the Camarilla. So yeah, definitely, but it would happen less frequently than maybe scalpers really want to see, perhaps. That's the only thing. All right, so, and good to see you in the webinar, by the way, Matisse. So regarding the euro dollar, I myself would not be looking for a breakout to the downside at the moment. If I look at the support levels here, price is still too close to them and too much above it as well for me to consider it. And let's see. You can see how close it is to that support level. I have to adjust the trend line just a bit. From a 4-hour perspective, one might get tempted to short it because the moving averages are aligned, prices below the moving averages. The thing is that this entire zone has been so choppy that in this regard, a break below the moving averages is not enough for myself. And I would need a break below this trend line to really activate that. Therefore, when I look at these lower time frames, I'm not too enthusiastic about trading a break to the downside right in front of the support because of the larger perspective. So I would not be that big of a fan. However, if I look at the impulse that we've had during yesterday's New York afternoon session, it certainly could make the impulse to the downside here, break below L3, and move down to the trend line. But those are some 40 pips that I wouldn't mind missing necessarily. The reason is I'm always looking for setups with, let's say, a certain minimum of what I consider probable and what I consider a good probability with a decent R2R space. And that's kind of my filter when I look at setups and when I look at the charts in the markets. And if that particular, any particular setup doesn't meet that requirement, then I don't mind skipping it, even if it does do what I expect it to do at the spots that I'm looking for. That's okay. The upside actually perhaps could be more interesting but then there would have to be some pretty good upside momentum occurring. The breakout to the upside above the H4, for instance, here, or a break, hook back, pull back, a break above H4 and a pullback to halfway H4, H3, something like this as I'm drawing, right, is important, or is important to see first before trading, and is upon the break and hook back also a decent space still left to the H5. The H5 I think is a conservative target, by the way, if that happens, because looking at the space, I think there's a lot more left than that. So I wouldn't necessarily see H5 as the target. But I would see H4 as a trigger for a potential long. And that has to do with the fact that if I look at the bigger time frames, I'm kind of using the Camarilla, but I'm putting a layer of bigger structure analysis over it to judge which one I think is the most interesting. If price breaks below L4, of course things do change a bit, obviously, because I'm looking for a long-term short. But you can see price would need to break below 112.50, and if it does so, it already actually hits the L5 and pushes below it. All right, so but this is how I do it. But if you only look at Camarilla and just take away the bigger time frame analysis, then obviously what you're looking for is trading at these levels and using it as a reaction. For instance, to give you just a quick reference, what I mean is when price approaches this L3, for instance, and the candle patterns are showing a potential double bottom. Why? First of all, we had many candles not able to break this bottom. What does that mean? The end of an impulse. For those that have been here more often know that I use 5 to 6 candle rule to gauge whether the impulse is over. But we certainly had 5 or 6 candles not breaking that bottom, so that is one thing. The second thing is we had a pin bar here, well, not a pin bar, but at least a wick right off the L3 and the bottom. So if not trading the L3 itself, then the price action certainly indicating that. And that could have been a Camarilla trade, for instance, right off the L3. In this case, a trail stop below the candle low would get you out here and book a quick 23 pips versus a potential half of risk. So almost a 2-to-1 trade probably, which is a pretty fast trade. That is one way of doing it. I myself would not take that trade because, first of all, I am not looking for these types of trades. But that's the only reason, actually. All right. So let's take a look at the pound dollar. The pound has a news event and therefore highly subjective and vulnerable, obviously, to the news event and its movement. And looking at the L3 and H3, it seems to be caught in the middle at the moment. For me, taking a look at a classical breakout scenario to up or downside would be fine. The pound dollar is a situation that I think it could move either way. It's kind of caught in a gray zone where it broke out, but still has a lot of downside momentum. And this could easily go both ways, in my opinion. So using Camarilla would be pretty useful here to get an idea of the sentiment of today. Is it pushing through L3 or H3? Dollar yen. The dollar yen is in that bigger triangle. This too could easily break to the up or downside, in fact. Let me take a look at the Aussie. What I'm going to do is I'm going to scan a few charts. And then I'll pick a chart that is most interesting. The most interesting chart is the one I'll even dive into lower time frames and try to see if there are any setups on a 1 or 5 minute chart. But first of all, I want to see which chart is the most interesting to me. And I want to do that together with you so that you can see what kind of process is behind it. If you think you have a preference, let me know. So the odd USD pretty much stuck in a very corrective zone. That doesn't look too interesting either. Dollar CAD. Also have a bit my doubts to trade this one, in fact. Let's see if the pound yen is a bit better. Let me get a new template on here. Yeah, the dollar CAD could be indeed, I agree, could be in a corrective like this. In that regard, it's a bouncing spot, but price action is not supporting it. So that's why I was skipping it for the moment, because it's not showing any signal of a turnaround. One could try to trade it in anticipation of the fact that it will turn, but that is, yeah, it's hoping in a way that it will turn, but we have no idea. It's not showing that it will turn, so that's a bit of a difference. It could still work out though. The alternative would be, dollar CAD, would be the fact that this is a correction, this is a correction, and then we go lower for kind of a three-wave correction. That's the alternative. or that could be even the main scenario indeed. That's what Elia thinks is the main. Yeah, it makes sense. I was personally thinking that this is more a potential of a triangle, or that triangle. Well, it could be become a triangle still if it does that. If it does this, sorry. Or kind of a three-wave correction. It was a bit of a shallow retracement here for that to happen indeed. So in that regard, a zigzag like that, a deeper correction like that does make sense. So let's see. At the moment, it's still right at support, which means that shorts are not that interesting unless price breaks through the support. And bounces could be interesting, but we need to see some confirmation of that, I think. So that's why I skipped it, because I don't like its place at the moment. And unfortunately, at this point in time, the majors don't seem very interesting to me. And unfortunately, at the moment, many of the crosses are, as far as I'm aware, not that greatly set up. So it's not a very exciting day so far. Last week seemed to be better. But let's still continue. Pound yen. Well, pound yen certainly had a break, of course, of this resistance. And the question is, how far can this push up? And if we look at the number of days we've had in this upside, this is the second day, the third day now at the moment after posting a new high here. So we're still in a potential momentum to the upside here on this 4-hour chart. Looking at 17 candles at the moment. So if anything, to me, this is still looking like a consolidation from upside at the moment. And looking at the 1-hour chart, we can kind of see a correction like this. The moving averages are being squeezed back to each other like that. But there's no divergence as far as I'm concerned. There's a bit of divergence, sorry. If we zoom back a bit. But the 4-hour doesn't have it. The hourly has a bit, but that actually doesn't matter anymore, excuse me, because price has gone back to the long-term moving average. So that has already lifted itself. It was only a single, so that's okay. The target of divergence is in my opinion, let's say long-term moving average or medium-term average. It depends how you look at it. I have the 144 as a target. 144 EMA close. So the breakout in this case would be when price is able to push through the weekly and daily pivot points. We see a confluence of weekly and daily pivot points here at around 182.40, 182.25. Yep. And a breakout would be, in my opinion, either actually we already had a pretty good candle here pushing through the daily but not the weekly as yet, so that was probably an early attempt of the pound yen to push up. The pound yen, of course, will be vulnerable to the pound news event too, but upon the end of the news event, or even looking at the 4-hour candle, depends, 1-hour candle close above the weekly pivot point would be a trigger that spells indeed the potential of a breakout here and the continuation of the uptrend. The 4-hour would have the same, but it would need to push a bit higher and need to break above 182.65 before that happens. Some might even want to see a break above this, but then we're getting pretty far. But these are fractals and resistance spots that are important to realize as well. So probably the hourly, in this case, I think the hourly is a bit better to monitor than the 4-hour chart. The hourly breakout here, probably one of the better ones so far that I've seen looking at these charts. The pound yen break to the upside on the hourly chart, above the moving averages, above the weekly and the daily pivot point, and above the H3 as well. All right. The resistance spot at the 183.25 that I talked about could be the target, but doesn't have to be the target. preferably I think actually the target should be higher because of the bigger trend that's going on here. A sustainable, further extended move up wouldn't be all too surprising. The target, the first target, the target nearby is always a good idea if we are trading reversals. At least part of that, at least part of the profit to take nearby is good to reduce the risk. With the trends, I think one could be a bit more aggressive in those cases. So I think that's a pretty interesting trigger on the pound yen. So the pound yen I'll keep in mind. Let's take a look at euro odd. Matheus is asking about the euro odd, so let's take a look. To me, it's a bit of a mixed ball game here. Ultimately, euro, let me refresh the template here. Ultimately, euro odd, what is this doing here? Hang on. Strange. Anyhow, ultimately, the bearishness seems a bit more likely in this case. It's not an easy structure to read because we had a fall strong upside, then a strong fall, then an upside, then a fall, then an upside. So it's not an easy one. But if I look at the wicks here, the wick and the indecision of last week, Elia is saying the euro odd WXY after impulse wave in weekly chart. Yes, definitely impulse on weekly and WXY, yes. So the question is, has the WXY finished? That is possible, something like this, but could easily be expanded as well, and therefore the Y would probably end up lower. But it could be already finished. In that regard, it's always good, despite the, let's say, the idea to have a certain preference for a trade, it's always good to have lines of the sand, decision spots. Wait for a price to get to decision spots and wait for price to react to those decision spots. And have trade ideas ready when price does what you think it will at those decision spots. By having a trigger in play and in your mind, and a trigger with the trading plan in mind, when price gets to a decision spot, and of course those decision spots also have to be decided by yourself, preferably. This gives you more control over the trading because it allows you to be patient and disciplined to that spot. It allows you to prepare it also when price finally does get there. The temptation to trade everything right away is just to kind of, most of the time, to fulfill our need for trading, which ultimately doesn't really help our trading. So by setting up lines in the sand, we're basically, I think, making a good step to trading in a method and a consistent way. When looking at the euro odd, I think that the decision lines for the moment probably have to be something like this. It's not the neatest of everything in the world. Something like that would represent two levels where price would have to break through before we get a more clarification, perhaps, whether this formation, which is pretty choppy and a lot of ups and downs and sideways moves, is ultimately still going to make a dash to the upside or a dash to the downside. Yes, good point, Beverly. Indeed, because the euro odd are quite equal to each other, both are quite weak at the moment, you do see that back in the price action, I think. It's quite ugly. And as I said last week I was a fan of the majors, not so much of the crosses, and this week the majors started to lose their appeal, but this particular cross really didn't gain much of an interest indeed. I agree. I don't think it's the most interesting chart there is indeed. The pound yen looks definitely interesting, and the euro odd is just as uninteresting as I think the others indeed. So I agree with you. And this is one that you, in my opinion, could easily skip. If you do want to trade it, then I would recommend to use some kind of level or trigger in mind that is still appealing to perhaps trade. Kiwi, let's take a look at the Kiwi. Also yet another dollar pair, of course, but ultimately this could correct higher, so I would be more willing to take a longs on the Kiwi than again on the odd USD, because the Kiwi has broken a ascending wedge to the upside, broke, then hit the minus 272 target, and has a minus 618 target ahead of itself, above it, that could easily be interesting. So for me, the Kiwi could be on the list as well to take a look at the lowest of the time frames and see if a potential bounce here somewhere up to the minus 618 target is possible. Ultimately, when we look at the bigger time frames, we see a bigger downtrend, we see recent momentum, and when price gets to the minus 618 target, we would have squared up and retraced a decent hunk of that momentum, and hence a downtrend continuation from that target is something certainly to keep in mind, I think. At least that's what I would do. So Kiwi could be interesting, pound yen too. That's the short list for the moment. Not to say that the dollar yen, Ilya is asking about the dollar yen, is not interesting at all. The dollar yen is interesting. But I'm especially interested in a break to the upside of the consolidation, or a bounce from the wave E completion. Until then, it can make a lot of ups and downs, a lot of consolidations. I'm not too big of a fan of that. But despite that, there is some divergence between these bottoms. There could be kind of a rally here upon the break of this slow, grinding, corrective move down. From a bigger perspective, and I think that's what you're talking about, it's because Ilya is talking about an ABC for W. What time frame are you actually looking at? Four-hour chart, okay. Yes, up and then down seems likely to me too. I agree. To me, this is wave E is probably not completed here. For me, this is probably just a part of E. So what we probably will get is this is the first part of E, this is the second part of E, we'll get a third part of E, we'll get that head and shoulders pattern I think that Ilya is looking at. I think this is it. And we will see some kind of correction, whether it's ABC or WXY or whatever, it doesn't matter. It probably will move lower, I would expect. And in the bigger picture, this is then part of the A, B, C, D, E. And then big upside after that. So that's the euro. Now, if you look at Camarilla, really, Camarilla itself, you don't really need long-term analysis like I'm doing. But I'm showing you how I use it as an extra tool for understanding the lower time frames. But it's not necessarily needed. But this is something that really is past my kind of level of usage. As I said, in that case, it's better to talk to Tarantula. Pound odd, could that be interesting? Let's take a look. It's not interesting at the moment for myself because the 1 hour chart, it certainly looks like a heavy correction to the downside, but the trend is still up. It would really need to break either above resistance here for me to get interested for longs, or push a lot lower and start to be a downtrend. So I know we're talking about a lot of pairs, but most of these pairs I'm not really interested in. So let's focus for the moment on the Kiwi and pound yen. Of course, the pound yen unfortunately has a news event, the pound news event, standing in its way, so it's a bit has its risks connected to that. That's what I wanted to say. Alrighty. But the pound yen, actually, I was primarily interested in the hourly because of the news event. So yeah, I'm not sure how interesting it is to look at lower time frames if the news event is that close. Let's start with the Kiwi otherwise. For me, the main trigger here is the hourly chart and the hourly potential to push above the weekly and daily pivot point, and of course the H3. So let's take a look at the Kiwi. Doesn't have a news event as far as I'm concerned anytime soon, so it might be a bit easier. Alrighty, the Kiwi just hit the minus 272 target, and it has the potential of going to the minus 618 target, remember? And if we put a fib on the opposite leg, on the downside leg, we see a pretty nice confluence of the 50 fib and a 61.8 fib with its targets. So those could easily be resistance spots logically. And basically it's difficult to say which one is more likely at the moment. If price stays basically above these moving averages and preferably starts to break now in these coming 4 hours, then the minus 618 target seems likely. If it ultimately fails in this candle to do so, it is actually the 6th candle not to break, and then a bit of a more retracement to the downside is likely. But before all support is out of the way, we'll probably get a bounce again to the upside. So in any case, looking at this particular structure at the moment, 74.50, 75, 74.80, right in here for the moment support when looking at the 4 hour chart to get up to that minus 618 target at 76.20. So when looking at this 4 hour chart, reasons to be bullish at least. Alrighty. 30-minute chart. So longs, not only at this 78, 74, 70-ish, 74.50, but 74.85 here are all possibilities on the New Zealand dollar, in my opinion. Let's take a look now at the lower time frames, like the 5-minute chart. All right, let's put a fib on the swing high, swing lows. The Camarilla levels are clear, but the Camarilla levels on the 5-minute chart, it's all the way down at 11.3, which is an interesting long potential at the L3. This is, of course, how you can look at it from a lower time frame perspective. It takes a while to shift gears and take a look at it from a different perspective, because once you have higher time frame ideas in mind, it's difficult to shake it off, basically. So if you want to trade lower time frames, only lower time frames, it might be good not even to look at the weekly, first of all, the weekly chart. It might only make sense to look at one daily candle, which was yesterday's daily candle at the max, but then quickly move on to maybe a review of the 4-hour, but even maybe skipping it to go down to the 1 hour and then to the 5. Because otherwise you're kind of filtering out potential scalping trades. You could still do it if you want to find a chart that makes the most sense, like we did today. If you're trading multiple pairs, it makes sense to do that to find a pair that has potential that day. If you're only trading 1 or 2 pairs, then you don't have to do that, and you could, still get a quick sense of some structure. You don't want to totally ignore key levels. Obviously, you don't want to do that, but you don't want to get too much. It's easy to lose that balance if you're looking at too many time frames when trading short term. That's my point. So when looking at the Kiwi, the Camarilla levels are obviously levels to think about. You can see here clearly the -272 target having its impact on price and not able to push through it. And we can start, in this case, using fibs because the Camarilla levels will take some time before they get used. Obviously, we can use them as a longing area, as a bounce, or as a breaking level for a continuation. Or even at a bounce to the downside, but I wouldn't do that personally because of the filter of the higher time frames that I used, which say that it looks like a bullish breakout is more likely for the moment. So if I put a fib on this swing high, swing low here, and use the discretionary way of fibbing, non-discretionary way, I see that at the moment prices hit a pretty extended target on the 5-minute world. Let's take a look at this fib here. This is what we did on the euro dollar. I still have to go back to that trade, by the way. We see a target being hit here. And we see the price bounce off the 61.8 fib right here. First move up, retrace to 23.6, hit the -272 target, and then retrace to the 61.8. Now the question is, will it retrace deeper? It could retrace deeper before moving up. Ultimately, it could break even the bottom, obviously. You never know. But for the moment, I will not assume that. But it could go down to the 78.6 fib. So looking at this particular chart and adding this fib, it actually seems ready for when looking at the 1-minute chart, the trend is down, the momentum is down, and it looks like a bearish breakout when using the oscillator and the 1-minute chart and the moving averages and the fibs. And it looks like a breakout trade right down to here, but it's a very small trade. It is only 15 or so pips. After which the bigger trade is from the 78.6 higher. So personally, I'm going to skip this short because it's so small anyhow, and rather would take the bounce at the 78.6 fib for an upside, up to the -618 target, which is close to 75.50. And from the 78.6 fib would be about a 60 pip space. So I would not rather trade it basically in the middle here to the downside or even to the upside. But we'd rather wait for price to get further into an extreme, further into a decisive point. So I don't know. It's going to take some time, perhaps. I have no idea when, if, and when it will get there. So we can take a look at it, but maybe we'll get a bit boring if we just watch this chart get to that area. But that would be, in my opinion, a trade idea that makes sense. But everyone has their own vision, so if you see it differently, no problem. The pound yen is making a similar correction on the hourly chart as the Kiwi is doing on a lower time frame. You can see that price, despite the uptrend, retraced here, then went up to the 50 fib, sorry, and then moved down to the -272 target, which could complete its correction to the downside, and it could be ready for that upside. But looking at the 5-minute chart, we see now in the 5-minute chart the Camarillas are further apart. The interesting thing is when on the 1-hour chart the Camarilla levels look, or the 30-minute chart the Camarillas look very close to each other. In some cases, in this cases it's pretty spread out. But of course, if we then move from 30 to 5, then it's a different story because then the Camarillas are further away from each other, and you can see that it will take a bit more time before they actually reach those levels. It won't take a lot of time, but it will take a bit more time. The 30-minute chart, of course, prices, let's say, relatively close to those Camarilla levels. The 5-minute, obviously, is going to have more space between those levels. And kind of making the same pattern as the Kiwi, in fact, also made this 3-wave correction and now correcting lower. Let me just use a blank chart for the moment. Well, we do see a break of the resistance here at the moment, this particular resistance. But it doesn't really lure me into anything else except the same that I already said about the hourly. So I wouldn't change that plan. Try to see if there's anything interesting on a lower time frame that makes sense, but not as yet. Anyhow, so for me, Kiwi makes the most sense for the moment, and pound yen too, but I would wait for an hourly candle to be able to prove itself and be able to break above the H3. And that's it for the moment. I've missed a few pairs like the EuroCAD, but I'm not a big fan of the EuroCAD. I'm maybe a bit picky today, I don't know why. I guess the market is not in tune with how I look at it, or the market is just not as set up as I normally think it is, at least for my trading. We've missed a few exotic pairs, but I really don't have much to hopes on those for the moment. So for me, the pound yen makes the most sense at this point, plus the Kiwi. Is there any particular pair you think is interesting, or is there any particular question you might have for any of the things we discussed in the last more than an hour or so? If you just look at the Camarilla here on the CAD yen, for instance, you could already have an indication of the fact the price is getting into an intraday bullish territory. Why? Just simply because, of course, we are breaking above H3. This is the breakout on the Camarilla point of view. Is the breakout that I think is interesting. Maybe, but I do admit that this Cayenne chart, when looking at the 30-minute chart, is not too appealing. So those are those are filters that I use to stay out of awkward-looking charts that still might work pretty well eventually, but are not the ones I would like to really intensify and trade, intensively analyze and trade, because it's, in my opinion, not really properly set up for a trade that is appealing to me, or I think has a good probability. The moving averages are, it's a great question. It's good to know. The moving averages are 21 EMAs, high, low, and close. And they represent a support or resistance band. What I use them for is basically primarily for support or resistance, but also to get an idea about the trend, if it's up or down, also to get an idea of the momentum, if it's highly sloped or shallowly sloped, to get if it's flat, it means that the price is in a consolidation, and in fact the breakouts are dangerous because price could go back to the moving averages, and the moving averages then become kind of a quicksand. I like the 21 because it's a fib number, but also because it's pretty close to price and therefore hugs price pretty neatly. So a lot of things: support resistance, trend, momentum, breakouts, bounces. And I use the 21 band because it gives a footprint. Instead of using one moving average, it gives a zone. And I think zones are more interesting than one particular level, because I don't believe that price will necessarily respect any of the moving averages, in fact. If it does, it's kind of coincidence. What I do think is that there's kind of a zone of support resistance that the 21 EMA kind of indicates well, a rough zone. So that's why I think that the band gives a better indication, because it's a wider zone of interest, and I think more accurately reflects what a trader is looking for. Not one point. Well, of course, with the top or bottom, it is one point, but even that top or the bottom has also a zone where price can stop. It doesn't have to stop to the pip on the top, on the exact top or bottom. So that's why I like the band. The fourth one is a 144 EMA close and indicates a long-term trend. And the Camarilla, the L3, L4, H3, H4, H5, L3, L4, L5 is a pivot point indicator. It indicates basically the break and bounce spots one could expect during intraday trading and also intra-week trading, and indicates bullish potential breakouts, bearish potential breakouts, range levels, and the breaks of those range levels. H3 and L3 are the typical range levels of the day, when the day starts, when the trading day starts. Price is usually in between those. And those levels are then the bounce range levels. When price is in between them, price is going in a range of the day. When price breaks through it, then we're seeing a potential breakout into an intraday trend potential. So when price breaks above H3 and H4, those are potential breakout trades to the upside, with H5 primarily as its target. The opposite would be true with the bearish breakout, when price is pushing below L3 and L4, with the L5 as the bearish target. Now, price can sometimes make false breaks, but those false breaks most of the time occur when the market is choppy, or when the break is against a bigger trend. and therefore hence the trade and the break, excuse me, in the opposite side of the trend kind of gets slammered or has some problems when moving against the trend. It doesn't have to always be immediately though. It could happen when it gets higher, even steeper correction, like the H5 or L5. So that's the simple explanation basically of just understanding the levels and how you use the tool. So I hope that made sense. It is a pivot point indicator indeed. Yeah, no problem. And if you have any follow-up questions, by all means, of course, just don't hesitate to ask me in the webinar tomorrow, for instance, or even now, but I am close to wrapping it up for today if there are no other questions. Once again, webinars tomorrow twice, morning and evening, and Thursday in the evening. Price action, channel type, strategy, and how to improve your multiple time frame skills. Back to the QE, doesn't look like we're getting the downside actually. Still hanging around the 75 level. Yeah, T had an idea of the long in this zone. That seems to be holding up, so I would like it to move deeper, but perhaps it wouldn't get there, of course. That's always possible, is that you hope for retracement, but price doesn't make the retracement. In that case, a breakout or pullback after the breakout are the things to look for after that. Well, okay, that I guess does it for today. Tomorrow we'll take a look at the charts. I hope tomorrow will be maybe a bit more interesting, and I'll have a bit more options regarding ideas and perhaps even lower time frame setups like we did last week. Oh, last week, one more thing we can take a look at. Maybe it's already too late, some of you left, but oh, I had well, sorry, I forgot that actually the marker of the trade last week on the 1 minute chart is on the other template. So anyhow, it ended up as a roughly break-even trade, so it's nothing spectacular to look at. The only thing that I found interesting was the time factor, how indeed it indicated that the downtrend wasn't going to make it, and that turned out indeed to be spot on. That was the only thing I really wanted to show you. But anyhow, it's on a different template. So hopefully I'll remember tomorrow. In any case, I hope to see you soon and wish you all good trading in the meantime. Cheers.